How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 34 to the Asian Session Library. On Monday, the 5th, February 2024, we had a successful Asian Session model with US dollar versus Japanese yen. Let's walk through it together. As always, we're going to be utilizing this time period from 12 p.m. to 8 p.m., which is our New York lunch dead zone period. We're most likely going to face consolidation, which is why I tell day traders to avoid trading here. There's no point in trying to trade in a moment in time where the market is most likely going to accumulate buy-side orders and sell-side orders, creating market sentiment. So we're looking for the 15-minute swing lows and swing highs via 15-minute time frame. And we're taking all the ones that are unbroken because those are the obvious areas of buy-side and sell-side liquidity. So all these swing highs that I'm marking off is where buy-side is residing. We also take the highest high of the session here, even though it's not a swing point. I like to take it because it can still be a significant level. You have a swing low here. Let's turn this blue. That's sell-side liquidity. This one we can't take because it's already broken before 8 p.m. So if we play it forward, see price comes down and takes out this sell-side liquidity. So we're raiding or purging this sell-side liquidity. At this point, we would look to see if we have a entry technique on a lower time frame, whether that's the 5-minute, the 3-minute, the 2-minute, or the 1-minute. I, Deontay, personally go down to the 1-minute. You can do as you please with the model. I'm just showing you what I do with the model. Bring it to community from the point of view of what I do. So get down to the 1-minute. You can see that's that 15-minute swing low that was rated, that sell-side liquidity. So we go sell-side liquidity here. That's that via 15-minute time frame. We also notice that we are below the Asian session open. So that's something that's crucial as well. We know that we're oversold. We're not overbought, we're oversold. How do we know we're oversold? Because we're below the Asian session opening price. Anything below the open is going to be a discount. So ideal buy conditions like to occur underneath the Asian open, not sell conditions. It's not ideal to sell below here, though at times you will find selling opportunities down here and be forced to be sell or find selling opportunities as a retail trader down here, but it's just not ideal. It's ideal though for the buy setup, and that's what I'm hunting, the turtle soup. I'm trying to get traders to sell down here while I buy. So I want to use their selling as sponsorship for my buys. And how do I find that? I'm looking for a certain entry technique. I'm looking for the entry technique of a fair value gap that breaks a swing high. And there we are. So we have a fair value gap here. And then we have a swing high formation right here. So as you zoom in, look at that entry technique, guys. It's the same one I've been showing for the last couple of episodes. A swing high formation broken by a fair value gap that forms below Asian Open and a discount. At this point, I'm looking for a 1-to-1 scenario. I could be risking anywhere from 1 to 3%. It all depends on what you choose and your risk appetite. So I'm looking for 15 pips minimally, and I'm going for a 1-to-1. Many times I like to scale out at 10 pips. Many times I like to scale out at 15 pips, or I like to move the stop loss to break even and see if I get a runner. So you play it forward. You see we do add here some drawdown here.
I can't help you with that.
Oh, Siri, I'm not talking to you. And price runs up and gets right back up to that buy side liquidity. Just gets there. Just gets right underneath there. You see how price algorithmically is just holding itself, stalling itself right below that buy side liquidity pool. That's very interesting to see. If you measure this up, you can see we've already attained 10 pips. So at that point, I would scale out. Scale out something, pay the trader. Because you don't want to sit here and price reverses on you and you haven't paid yourself. All that hard effort of waiting for this time period and this entry technique to form just for you to take a loser. At least take partials, especially if you've been rewarded profit. If you play it forward, we can see price does get to that 15-minute swing high. And after getting to that 15-minute swing high, you can see price ultimately comes back down and stops us out. Going into the true day, Tuesday, open. We could also see on the flip side, this is why I like to show this because both sides can occur within the same session. So a buy and sell opportunity can occur. you can see the sell opportunity. What's the inverse to what I'm showing you? Price creating a fair value gap to the downside after breaking a 15-minute swing high and a fair value gap that breaks a swing low. Can we see something like that along the lines opposite to this? Yes, we can. We can see this is buy side up here. That's buy side liquidity via 15-minute broken. And right when that is broken, what happens after? This one was immediately, but if you were stalking the setup, you would have saw that it happened immediately. Sometimes it doesn't happen right away, but this one happens to happen right away. Fair value gap to the downside, swing low broken. Same idea, but inverse, right? I generally don't like to take both sides. If one side of the market has already produced a buying opportunity, that's it. But if it presents a selling opportunity within the same session as well, I'm not taking it. But it's good to study it and good to know this, because you can use this as your advantage to say, okay, let's say I wasn't able to take the entry here, or for some reason I was late to the party, but I saw this. You could take this as an opportunity to go short. If you missed this, if you were late to the session, this could be opportunity here. And the same thing would apply. You would go short, you're risking 1% to 3%, whatever that case may be, a 1-to-1 scenario. There we go. That's that same idea, but inverse. Everything inverse. The entry technique is happening where? Above Asian Open. Let's play it forward. Price taps into that fair value gap multiple times. You can see it finally sells off and gives you the 15 pips. So this is something we've seen in other episodes. So for those that are watching this, this is not something new. If you go back and watch it from episode 1 to this current episode, you've seen I've talked about this before. We've seen different scenarios like this unfold. Now, those that are new to it, this might be the first thing you've ever seen. Like, wow, there was a buy and sell opportunity. Yes, this isn't not anything unfamiliar to those that have watched every single episode or has been up to date with the Asian Session Library. So hopefully you find this insightful. Peace.